Well, hi folks, it's Stratman here from Pickware.com. Been writing software for Forex now for a little while, and I've been quite successful. People are using my indicators quite successfully, and I quite often get asked, I make quite generic indicators that don't really have any particular strategy attached with them often. What do I usually use personally when I'm trading as my main strategies? Well, to be honest, it's a bit of everything that I've read about Forex trading, but let's try and break it down into the basic concepts that people would use for trading. So this video is kind of an introduction to strategies and what each strategy typically has within it. And then the next few videos I'll cover some specific strategies that I personally like, and we'll see whether there's much benefit in all of these for each of us. Right, so the first part of a strategy, well, I think that most strategies have three main components. One is a price action component, so we're looking at the actual candle formations themselves and looking for 1, 2, 3 patterns. We're looking for triangles, we're looking for ledges and consolidation areas and things like that. So price action is quite a major part of any strategy, and with price action we're talking about things like plotting support and resistance lines, trying to determine places where price is likely to break through, use as a piece of support like here, break through and then come back as resistance. That's price action. So price action is a big component of strategies. So that's just with naked charts basically. Then the next thing we usually like to do is get an idea of what's happening with trend, because we know that the trend is our friend, so we're looking for which direction the trend is going. So in this case, on this chart, on this time frame, which is the 1 hourly, the trend is downwards at the moment here, but if we went out to the weekly, it's downwards but it's turned around. So where is the trend? Is it turned around coming up, or is it going down? Well, it's totally dependent on your point of reference. So for me, I'm typically trading on the M15 time frame. So what I'm going to do is I'm going to look at higher time frames and see what's going on there. So on the M15, we're sitting here right now, but on the H1, which I like to go to, we're sitting here. So what's an easy way to see the trend? Well, what most people would do is put a moving average. So if we just change over to one of the strategies I look at, which is THV, just remove that line. THV's got a moving average in it, and it's called the Coral. And this is a 60-point triple, 60 period triple exponential moving average. It's coloured so that you know when the market is trending flat and when it's rising and when it's falling. Obviously, slightly lagging on this particular time frame, but that's of no real problem to us. It's a good line in the sand, so to speak. When price is below the moving average, we trade down. When it's above the moving average, we trade up. We typically wouldn't trade towards our moving average because typically prices would consolidate there. So a moving average is another good part of most strategies. Now, people use all different periods. I prefer the 60 period moving averages. That's what I've been used to with THV, and once you get used to one particular moving average, you tend to use it a lot. Other people like the 40 period, some people like the 200 period. I mean, it just comes down to personal preference. For me, it's the 60 period. The last part that most people will use in a strategy is some form of oscillator. Now, oscillators are really good because they act as kind of like a bit of a filter to what's going on with your price action, and where you think trend is based on your moving average. So you can use oscillators like stochastics is a favorite of mine, and the tricks from THV is as well. So a typical use for the oscillator would be to look at it and say, well, at this point here, if we put a line on there, we've had just a massive up move right here, but on our oscillator it's showing that we're right at the extreme top here, and that would be considered overbought. So just looking at price action alone, it would be very hard to tell that that is overbought and possibly going to come back the other way. because we're above our moving average, so we're going to trade long. So the oscillator is a good filter, helps us know when things are overbought or oversold, as in the case here. Now, another thing that oscillators are really good and helpful for are picking up divergence. In other words, we'd be wanting to trend downwards here based on the coral or our moving average, but if we look at our oscillator, we can see that the oscillator is starting to head upwards. So if we draw lines, like particularly from here to here, price action's been going downwards, and our oscillator here, if we just take the fast tricks there, I mean, it's going upwards compared to going, they're telling a different story. So we call that divergence. And so oscillators are really good filters. They let you know quite often when to be careful. When you think you should be trading in a certain direction, they can tell you, well, hang on, just wait. So the overbought and the oversold areas are great, and the divergence areas. So to summarize, most strategies would use some form of reading candle patterns. Maybe you're interested in inside bars and outside bars. Maybe you're interested in 1, 2, 3 patterns. There's so many different ways to read just the candles. Then we're quite often interested in a moving average to determine the current direction of trend, and then we use oscillators as some kind of filter as to whether what we're seeing up here is really valid. Then from there, there's all sorts of things that you can add to your trading strategy. Obviously for me, I've been building my dashboard, and it's got lots of other bits and pieces. We'll just have a quick look at some of the extra things you might add into your strategy. So for me, this is my current trading system. Like I use stochastics quite a bit, so I've got stochastic mini charts so that I can see what stochastics is doing on each time frame. I've got moving averages happening on the charts, and I read my price action. I look at fractals as well, which is the swing highs and swing lows, so that's kind of like reading price action. I always look to the daily range, what's happening in the Asian session, because quite often I'll trade it as kind of like an Asian session breakout. So many different things that you can do. Also, I've added in an alert engine for myself to try and help me test heaps of different strategies. So what I'm trying to get to is, in this introduction to do with strategies, is I don't really use just one strategy per se. I combine many ideas from all the different things that I read around the internet, and the idea for me is to make a tool, which I've called the dashboard, that can be used for many different strategies. Basically, you just configure the many options to get it to kind of behave in a way that is advantageous for the strategy you're looking at. And same thing for the alerts here. You can decide how you want to set up all your alerts. So next video we'll just get into specific strategies that I really like. I look to that give me a few ideas about how to read price in a way that's profitable. Well, I hope this introduction has been helpful to people, and we'll do the next video shortly.